Hi, and welcome to another capital raising breakdown. Today, we're going to be going through an article written by the Adventist founder, Ryan Trainor, where he talks about what he learned raising $22 million via Zoom. Now, this was an article on Startup Daily, and it was in June 29th. Now, for me, I love this article because it goes through a lot of things that we actually talk about with raising capital. So let's go through it. So obviously, the first thing he highlights is when the pandemic hit, like most of us, the first thing we had to figure out is, how do we support our teams? How do we make sure that we actually keep our teams? And then the second part is then obviously he's thinking about the actual capital raising part and the difference it can make. So first thing he highlights is that Zoom is tiring but incredibly valuable. Now, I'm sure you guys are like me in that the sense that you're doing anywhere from probably 8 to 12 meetings a day now, and typically those meetings are 30 minutes. But what I love about what he highlights is so much of capital raising is about human connection. And we talk about this, right? The building of a relationship rather than the focusing on a transaction. That is the human connection part. And he highlights you need to build genuine rapport to tell your story in the most compelling way. You need to read body language to see if people are actually connecting with what you're saying. And then he goes on to highlight that with each investor call, our team thought deeply about how to present and connect and get better at this over time. So one of the things we've highlighted in our workshops is that this process of capital raising is a constant process of refinement. It's analyzing what you've done, understanding what's worked really well, and then just consistently improving your own process and to getting that feedback from investors and then using that to improve it and go to the next. Because that's really, I said, the only way that you can become really strongly skilled at this process is by being that thoughtful about your capital raising process. Then in what he goes down is he talks about how with Zoom it enabled him to cast a much wider net and connect with a lot more people than he otherwise would have. And to be honest, look, we've also seen that in that, the barriers for entry for capital raising have really been broken down in that, I said people aren't having to fly to go and meet each other. And it's just become so much easier to have conversations with people that aren't located in the same area as what you are. So it does provide a lot more opportunities for founders to speak to investors that may not have spoken to them previously. Okay, next one. This is my favorite one because often founders will get insulted when they get feedback. Learn to love feedback. Feedback from potential investors can be confronting, but it is crucial to your success. In fact, we did a video on this talking about how this feedback can end up being one of the greatest opportunities and strengths for your company going forward, right? Every question you get, if it's an objection to a part of your vision that you really feel strongly about, is a gift. 100% agree with Ryan on this one because it said, I know the difference that getting rejected has made for me. And I know the actual, the power that it's had in helping me sort of go through my own transformations with my business. And then he just highlights, so you're speaking to some of the smartest people in the world. Don't be defensive about their feedback, but welcome it. In fact, I'm going to add one other layer to this in that what's really cool about getting this type of feedback is that effectively investors have a helicopter view of your business and said they may have seen 3 to 5 to 10 other opportunities that are similar to you. And they can provide feedback on their models or what they thought was interesting or what they liked or what else they're seeing in other sectors. Sometimes learning about what's happening in another sector can be actually quite useful for your business, right? Because it just can give you ideas. For me, there was a transformational idea I had for my business, which came from a good friend of mine interviewing a hairdressing salon. Now you think to yourself, what connection possibly is there between a hair salon and a private investment platform? Right? So interesting way, you can learn a lot of interesting thing about understanding different models. Next one, don't be afraid to be vulnerable. For me, I've also found this to be quite powerful. Sometimes even in conversations with investors, I'll talk about what I perceive as the challenges. And sometimes I do that just because I want them to be aware as well, because sometimes they may have solutions for my challenges. It makes life a lot easier when you can be vulnerable and you can communicate and have those he highlights about having authentic conversations. He writes that investors want to see that you've got humility enough to be coachable and learn so that they can still add value and share their experience with you as well post-investing. And I can absolutely assure you this is the case. In having a lot of friends now that are active, sort of either angel investors or VC investors or family offices investors, so when they deal with people that are overconfident, right? So sometimes said they love confidence and they love natural enthusiasm, but there is a fine line between being overconfident in the process. Next one, and this is most important for founders to remember. Remember, timing is a huge factor. So much of this is about timing. Try to understand as much as you can about the internal process of your potential investors, even if it's not an immediate win. They might be a good fit later down the line. I said people have this, this bias towards what's in front of them right now, rather than thinking about what is that long-term potential of an investor in keeping them updated. And then he highlights it was still very important for us to get to know the investors that didn't sign on right away. They may not fit the mandate for this current round, but they still could be a really influential and supportive potential investor in the future. A no today doesn't equal a no forever, right? So one of the key things that I learned from one of my shareholders is promise, do, tell. So promise, talk about your milestones that you're looking to achieve. Do, achieve the milestones. And then 3 is tell them about your achievement of the milestones. I said, if you skip any of those 3 different components in that actual process, you're not doing yourself the best justice, or your opportunity the best justice for what it can potentially achieve. Now, next one he goes on to highlight. As I mentioned, don't be disheartened by a no. Every meeting you have gives you the chance to learn and improve. 100% agree. Shift your thinking regarding valuations. The big valuations aren't always a good thing. Shooting too high, too early can always come back to haunt you. In fact, if investors see valuations often which they think are ridiculous, they just won't even chat with you, even if they like what you're doing. Right, because as I said, what they're looking to do is they're looking to come in is what they perceive as a fair valuation. And look, sometimes even when the market is hot, if you've got references, like typically the best way to communicate that valuation issue is related to references of other companies that have been able to achieve similar valuations. But with understanding the metrics that they use for that, I think is also important. And then also, if you've got, if you can validate and highlight your reasons as to why, I think that's also important as well. Some people like to use third-party IP valuations. That doesn't work for investors. They'll just discard that immediately because you paid for that, right? So these are the kind of things that we often talk about with founders. But in this article, I said Ryan just breaks it down so well, some of the key elements that founders should be looking at when they actually go to a capital raise. So that is the capital raising of Ryan Trainor, the Adventus founder, where he talks about what he learned raising $22 million on Zoom. I hope that's been valuable for you all. A lot of great lessons and insights from this actual article.